Hello everyone, welcome to today's vlog, which is on the marriage allowance. Now the marriage allowance is a little known tax break afforded to married couples or those in a civil partnership. So let me just rewind a bit and talk you through independent taxation. Ever since 1990 in the UK, husbands and wives have been treated separately for tax. For many decades up to that, the tax affairs were combined in certain circumstances. But ever since 1990, a husband has been taxed on his income, a wife has been taxed on hers. The principle of independent taxation. Now, that has no longer applies in this one instance called the Marriage Allowance, which was an initiative under David Cameron's government, came in about 4 years ago. And for the first time in decades, there is a connection between incomes for spouses, which I'm about to explain. Yes, there is obviously still the very much the connection between spouses for inheritance tax when you transfer nil rate bands and all that kind of thing. But we're not going to talk about that today. We're talking about income during lifetime. So whilst you are living, taxable income. So how does it work? In a nutshell, what this marriage allowance does, it says that one spouse can transfer up to £1,250 of their personal allowance to the other spouse. So every individual has a personal allowance this tax year, £12,500. So you pay no income tax until you have earnings or any other taxable or any other income above £12,500. That's the point at which you start paying tax. So assume you've got a scenario: spouse A, spouse B. Spouse A earns £5,000 a year. Spouse B earns £20,000 a year. Now, spouse A is paying no tax because all of their earnings are below the personal allowance threshold. But spouse B is paying some tax at 20%. Remember, 20% tax in the basic rate kicks in on any income above £12,500. So what this marriage allowance does, it basically says that £1,250 can be transferred from spouse A to spouse B. So, in effect, spouse B has a personal allowance of their own £12,500 plus £1,250 transferred from their spouse. And in a nutshell, it saves them £250. So it delays the point at which they pay basic rate tax. Basic rate tax at 20%, 20% on the transferable slice of £1,250 is £250. So this is what it's worth. It's worth £250, but it's better than nothing. If you can claim it, why wouldn't you? But not many people know about it, and it's been on the statute books now for about 3 or 4 years. So think about it. If you're in that situation, who is it apply to? Who is eligible? Well, you have to be married or in a civil partnership. One spouse has to have income below £12,500 for this to work, and the other spouse has to be a basic rate taxpayer. It's not open to those who are higher rate taxpayers. The government thinks that's too generous if you've got one spouse as a higher rate taxpayer and one is a earning below the threshold. So one spouse earning or has income less than £12,500, the other one is a basic rate taxpayer. Now, basic rate at the moment, the threshold is 50,000. So if one of the spouses has income between 12.5 and 50 grand, that qualifies, and the other spouse income below 12,500. And then you can just transfer this amount across, save £250. Fantastic. Now, don't get confused with something else in tax law called the Married Couples Allowance. So this is the marriage allowance. Don't confuse it with the Married Couples Allowance, which was another initiative another tax break for married couples, but it hasn't. It doesn't apply to many people because to get it, you have to be born before 1935. It's one of these things in the tax rules that just stick in the statute books for years and years and years, and now there's hardly anyone left to benefit from it. So anyone over 85, yes, potentially have a look at the married couples allowance if you're not already claiming that. It's something completely different. It's actually more generous than the marriage allowance, but for the vast majority of people who are below 85, who are married, it's this marriage allowance that they need to consider. So £250 for nothing. Think about it. What also applies is you can backdate it. It's retrospective. So this has been in since 2016. Now you can make a claim to go back 4 years. So we're October 2020 now. You can go back to the 5th of April 2016 and make a claim for multiple years of this transferable allowance, this marriage allowance. So let's say you qualified in all the years. What I'm saying is to qualify, like I said earlier, one spouse earns less than the personal allowance. One spouse is a basic rate taxpayer. Yes, the limits have changed over the last 4 years, but the definitions still apply. If you earn below the personal allowance threshold in 2016, 17, 18, 19, and the other spouse was a basic rate taxpayer, then you can get this £250 for each of those years. So you could be eligible for £1,000 right now just for making a claim, and then £250 each year that you do it. So do have a look at that. It's called the Marriage Allowance. Applies to anyone who's married and in a civil partnership. One spouse, low earner, one spouse, basic rate taxpayer. If you like this video, please do subscribe here, and I will see you soon.